Morgan Stanley said an escalation in tariffs remains a meaningful risk. It could come any time. We know that. Despite this partial deal, join us now with more on the trade agreement and the impact on the Americans. Let's bring in Simeon Hyman. He's global investment strategist at ProShares Advisors, and Andy Green, who probably is even going to say better stuff than you on this stuff, Andrew. Center for American Progress Action Fund Economic Policy Managing Director. You hate everything about everything that Trump has done on this, don't you, Andy? At this point, he's hurt America and gotten absolutely nowhere. Does that sort of sum up your comments?
That's not far off. It's pretty consistent across trade, financial regulation, taxes. It's not good stuff.
Democracy, Constitution, everything.
Good. Yeah,
right. Okay.
Just about.
All right. But my question to you is going to be, though, seeing that exports to America are down 22% and total exports in China down 3%, there is over there, at least it's on the radar, that maybe we need to try to do something to get back to the relationship we had before. There may be something good come of this in the end, or it's impossible that anything positive ever happens from it.
Well, this is not a Make America Great Again question. This is not about getting back to a good relationship with China. Look, President Trump has picked up the playing book that the Democrats have been putting forward on this for a long time, saying that we've got real problems with the U.S. China economic relationship. But just as in with his tax policy, his financial deregulation policy, he's put U.S. corporations first and the American people last. This deal, this not even a deal. The thing about it is, at best, it is fraud, because there's no deal, and at worst, it's harmful to American national economic interest by further making U.S. farmers even more dependent upon the Chinese state government for buying American crops, while addressing none of the challenges that are there in intellectual property, and he doesn't even bring up the lack of labor rights, environmental protection, human rights, a bunch of other things that make the playing field very unlevel for American workers and consumers and businesses.
I mean, I understand. I know where you're from, Center for American Progress. We should probably spell that out. People don't know what CAP is, but just in interest of fair disclosure. So you don't see any benefit to making our corporations more competitive so that they hire more people and that so wages start going up? We're at 3.5% on unemployment. Nothing about deregulation or tax reform has been a positive at all, Andy. It's just been bad for American workers. It sort of flies in the face of what we're seeing in the labor market, doesn't it?
Well, this has been a recovery that has been going on long before President Trump took office.
I understand that. I understand that.
The U.S. corporations have an absolutely important role to play in the economy. They do hire folks, but let's be very clear. The president promised $4,000 of wage increases to working families when he passed this tax cut. He has not delivered on that by any stretch of the imagination. The question is, will intellectual...
For the private economy, what's more important than the corporations in American business for the economy? The government can't take that mantle, can it?
If you look at what's actually created wealth and jobs and economic growth, it's the government investments in things like the internet, it's research and development. So many of the major technological and other innovations come from government and public investment. So,
okay, there's investment, but I mean, the GDP, most of the GDP is generated from the private sector. No, Andy, have I got that wrong? I got to go back to school?
Absolutely.
Okay. All right, let me get Simeon. So, Simeon, I don't know where you want to start.
I'm going to get back to sort of regular stuff.
Okay.
We've quietly, or maybe not so quietly, had a bond market sell-off, which is useful to look at on a day when the bond market is closed. But 10-year yields have risen 25 basis points, which says
really
something.
Calling that a sell-off?
Well, it's a directional thing, but here's what's interesting. Yeah. They also went up 25 basis points in Germany, where the macro data is considerably worse than even in the U.S. So I'm just throwing out there that complacency there might not be a good idea, even if the economy is a little bit weak. Something to think about on a bond market vacation.
Wednesday, Thursday, and Friday, Simeon. Okay, the deal, now we see it, whether it's a deal or not. We're going to talk to the Treasury Secretary at 8. Is it a deal? Is that warranted? Are we now ahead of ourselves in terms of the equity prices? We're back above 2,900 on the S&P.
So we've got about a 10% discount to fair value on the S&P just based on 1.75 on the 10-year. You could get to about a 22p on that basis. We're about 20. So you got a little bit of valuation cushion, not very much. I think the trade deal is probably the only real source of upside in the near term, because I don't think we're going to have a great earnings season. We have banks reporting this week. It's been a tough environment for banks. Deal volume is slowing a little bit, and the yield curve was inverted up until just a week or so ago. So I don't think you're going to get a big impetus from the earnings side. But we certainly know politically a win on that front sometime as we approach more of the height of the election season is not a terrible thing to bank on.